What is VAT? VAT stands for Value Added Tax, and in the UK, for most goods, it's currently 20%. This means that when you buy something in a shop for £9.99, the shopkeeper is only getting £8.33 of that, because £1.66 goes to the government in the form of tax. This applies to you too. If you're selling a good and you want to sell it for £5, you actually need to sell it for £6 because you need to add on VAT at 20%. Here's a couple of quick ways for you to work out VAT on your products.
If you are adding VAT to your price, multiply the price by 1.2. If you want to find out how much you get to keep when you sell your product at a particular price, divide the price by 120 and then multiply by 100.
Okay, so you know that value added tax is at 20% and you have to add it to your products. But just like in the real world, you can actually claim some of that tax back. The secret is in the name, value added.
Let's go back to our mug decorating business example and let's look at the entire life cycle of that product. It starts with clay in the ground that somebody digs up. That clay is sold to someone who turns it into a mug, and then our example company buys the mug with some decorating pens and sells it as a final product. Now, when the person digging out the clay sells it, and let's just assume for simplicity's sake that they did not buy the clay, it was just there, they sell it for £1.20, with all of the work that they're doing adding value to that clay, so they pay 20% VAT on the entire lot. The person that is going to mould the mug buys the clay for £1.20 and then takes some time to craft it into the mug. They then sell it on to our example decorating company for £6. As you can see, £5 is the price they charge for the mug and £1 is VAT. However, VAT should only be paid for the amount of value they added. The easiest way to think about it is to take off any VAT that's already been paid. So in this case, that is £1 minus the 20p that has already been paid to the person who dug it out of the ground. So when this company comes to pay VAT to the tax authority, they will pay 80 pence with the proof that they have already paid 20 pence to the clay supplier.
This is why shopkeepers often ask if you would like a receipt or a VAT receipt. For businesses, this is the proof that you've paid a certain amount of VAT, so you can take it off the extra VAT you have to pay the government. Now, all these calculations are done later, so on the receipt that you get, it will just list VAT at 20%. Still with me? Let's take a look at one more example.
Our example company have bought the mug from the sculptor, and let's assume that they are using pens that they've already got to decorate the items. They sell the decorated mug for £12. They already know that the £12 price tag breaks down to £10 for them and £2 for VAT. When they come to pay the tax authorities, they have charged the customer £2 of VAT, but know that they've already paid £1 of VAT when buying the mugs. So the VAT they have to pay the government is the £2 minus the pound already paid, therefore £1.
Okay, hopefully your brain hasn't melted yet. Don't worry, the Young Enterprise website has a number of tools to help you calculate and track VAT. If you can remember at this point that value-added tax needs to be added to all of your products, it's 20%, and that later down the line you'll be able to reclaim any VAT that you've paid on things that you've bought, then you're doing very well.